Samsung isn't just a company, it's an empire, a dynasty, a name so powerful in South Korea that it's often said the country is not just a republic, but the Republic of Samsung. In the West, we might know Samsung for its smartphones or TVs, but in Korea, Samsung is everywhere. Real estate, food, finance, life insurance, hospitals, even defense. You can live an entire day in Seoul using only Samsung products and services. And yet, this unstoppable behemoth is now facing something no one expected: a crisis. In early 2024, Samsung Electronics, considered the jewel of the entire group, was worth about $400 billion. But by July, a wave of panic swept through investors. Foreign funds pulled out, stock prices nosedived. In just a few months, Samsung had lost $122 billion in value, nearly half of its market cap, gone. This wasn't just a financial blip. Samsung represents about 20% of South Korea's entire GDP, so when it shakes, the entire country feels it. But what's really going on? Is this a fundamental failure or just market overreaction? Let's break it down. To understand Samsung, you need to know how it's structured. It's what's known as a chaebol, a family-run conglomerate. The founding Lee family still holds massive control, and leadership is passed down from generation to generation. But with that power has come controversy. Every single Samsung leader has at some point faced legal trouble, from bribery and embezzlement to tax evasion and perjury. In 2017, heir Lee Jae-yong was charged with offering $38 million in bribes to companies connected to the South Korean president. One of those companies? A German firm offering horse riding lessons to the daughter of the president's friend. The goal? Gain support for a corporate merger that would give Lee more control. By 2022, he was back in charge of Samsung Electronics. Why? Because the government essentially said Samsung was too important to fail. Samsung's traditional top-down hierarchy might have worked during boom times, but insiders say it now stifles innovation and makes the company slow to adapt. And in an age where markets evolve daily, that's dangerous. 3 big reasons: missed AI opportunities, weak semiconductor performance, chaotic leadership changes. When the generative AI boom hit, Microsoft, Google, and Nvidia sprinted ahead. Nvidia, which supplies GPUs essential for AI, saw its value soar past $1 trillion. Samsung? It was stuck on the sidelines. This was especially damaging because Samsung is a massive chip maker. It should have been at the center of the AI hardware gold rush. Instead, its high-bandwidth memory chips failed to meet Nvidia's strict standards. The deal collapsed. Competitor SK Hynix swooped in and took over. Now, SK Hynix is the sole supplier of high-bandwidth memory chips to Nvidia. A brutal blow to Samsung's semiconductor credibility. They even issued a public apology, admitting they missed targets in AI memory tech. In the same quarter, profits came in $900 million below expectations. Vice Chairman Jun Young-hyun bluntly admitted that investor trust was fading and that Samsung's competitive edge was being questioned. Beyond AI, Samsung's Exynos processors have struggled for years, overheating, lagging behind Qualcomm's Snapdragon chips in performance and battery life. So much so that Samsung often ditches its own Exynos chips in flagship Galaxy phones sold in North America. And then there's TSMC, the Taiwanese chip-making juggernaut. TSMC holds over 60% of the global market, while Samsung trails far behind at just 11%. Worse yet, Chinese companies are starting to catch up in areas not restricted by US sanctions, like automotive and home appliance chips. By the third quarter of 2024, demand for memory chips was plummeting. Samsung's worst fears were coming true. In May 2024, Samsung ousted its chip division head and appointed Jun Yong-hyun to steer the ship. But this leadership shuffle wasn't new. Since 2021, they've gone through multiple CEO changes across divisions. To some, it looks like indecision, a lack of clear strategy. Internally, it's chaos. And with chaos comes fear. Fear among employees, fear among investors. That fear is what turns a company's rough patch into a full-blown crisis. Now, Samsung is in damage control mode. Executives have been ordered to work 6 days a week. They're planning layoffs across Southeast Asia and Oceania. Up to 10% of staff may be affected in some regions. They're also scaling back investments in non-core projects to focus entirely on semiconductors and display tech. Samsung's Device Solutions division, which includes memory and chip systems, saw profits fall 40% from the previous quarter. And to adapt, they plan to cut down foundry operations by 50% by year's end. These are not small adjustments. These are survival moves. So, with all this, is Samsung doomed? Not necessarily. While Samsung Electronics is taking a beating, Samsung as a conglomerate is highly diversified. Construction, healthcare, banking, and consumer electronics are still holding strong. Their revenue for the last quarter was $59.3 billion, up 7%. But profits dropped due to incentives paid out to staff in the chip division. In short, the collapse in market cap is less about current performance and more about lack of faith in future leadership. Markets are driven by sentiment, fear, expectation. $122 billion is a massive loss. It's a gut punch. But it's not necessarily an extinction-level event, yet. If Samsung can't course-correct fast, more panic could follow. But they're not without hope. New leadership is in place, cost-cutting is underway, and they've acknowledged their failures. The question now is, will that be enough? Only time will tell. Thanks so much for watching. If you enjoyed this episode and want to stay up to date on the biggest shifts in tech, business, and innovation, consider subscribing. There's plenty more content just like this. Thoughtful, in-depth, and always curious. As always, I appreciate you being here. I'll see you again soon. Cheers.